Hey everybody, and welcome to Insurance 101 with my insurance agent, Cassie Robles. She is a producer at PCF Insurance right here in Bellingham. And Cassie, you have been selling insurance for quite a few years now.
Yeah, I'm in my 8th year now.
Wow,
Yeah.
oh my goodness. And
Yeah.
Cassie and I used to work together. We were just saying that I left the company almost 6 years ago now.
Blows my mind. Blows my mind.
We worked together, I think, almost 2 full years,
Yes.
or right around there.
Oh yeah, definitely.
Yeah. So we've definitely had lots of conversations about homeowners insurance and car insurance and earthquake and all sorts of things.
All the good stuff.
And you're my insurance agent, so you did my home policy, my auto, my umbrella, all the things, and we're going to get into what some of those mean in this series today. Well, let's jump into types of insurance. Now, you are a personal lines insurance producer. What all does that mean?
Yeah, so it means basically any insurance that's covering your personal assets, so home, auto, umbrella, earthquake, flood, landslide, and all of that's in between those main categories there.
Fantastic. A lot of times people think about their home and their auto as kind of their core components for insurance. And then what would you say is the next layer that people should be thinking about? If they're like, well, I have homeowners insurance and I have auto, what else is there that for them to kind of watch out for?
Well, if you're a homeowner, that means that you have an asset that you need to protect. And you don't just do that through your homeowner's insurance. You do need to think about perhaps an umbrella policy, and what that provides is additional liability on top of your home and auto policy. So as you know, you can get up to $500,000 worth of liability coverage on your home and auto. If you desire more, then you would look at an umbrella policy, which gives you additional liability at $1 million increments.
Fantastic.
Yes.
So let's dig into home insurance 101 since we sell houses over here at the Bellingham Real Estate Co. And obviously a lot of times people bundle their home and auto together, so those are very, very linked. But for home insurance coverages, there's a whole alphabet soup situation.
Yes.
So can you kind of overview what those main coverages are for a homeowner policy?
Sure, I can. Now, of course, every company and every product is going to be a little different, but basically the main coverages you're going to see, the first one that usually catches everyone's eye is going to be dwelling coverage. And what that number is the estimated replacement cost for the home structure. And it can create a lot of controversy because this number does not take into account property value. So it's oftentimes a lot less than what you would buy your home for or what you would sell your home for. So for instance, you know, you might purchase a property for $500,000, but your homeowner's insurance dwelling coverage is like $400,000. Again, that's the estimated replacement cost from an insurance perspective of what it would cost to rebuild your home to the exact state it is in at the time of a loss. So that's dwelling coverage.
Awesome.
What kind of goes hand in hand with dwelling coverage, and it isn't associated with a fun letter, but I definitely want people to be aware of what we call extended replacement cost coverage. This is typically included with a good, well-rounded homeowner's insurance policy, and it can give you an additional 25 to 100% additional coverage for your dwelling. So that's a great advantage to have, and it just gives you a little bit more peace of mind with a little bit more complete coverage for your home structure.
So the idea there might be someone has a fire and it's one of those months, say in 2020 when lumber costs were just through the roof. You got some extra buffer there.
Exactly. Or if you've made improvements that maybe you haven't talked to your agent about, like you re-sided the home and there's a little bit more value, or it might be a little bit more to replace those materials at this time. Yeah.
What about someone who has a whole bunch of buildings on their property?
Yeah, so that would be the other structures coverage. And typically that's going to be automatically included at a homeowner's policy, usually at 10% of what the dwelling coverage is, but you can increase that amount. So if you have outbuildings on your property that you are concerned about, be sure to express that to your insurance agent and make sure that you have good coverage for those. So if anything happens, you can replace those buildings as well.
Fantastic.
Yeah, and then after other structures, typically if you're looking down the line on an insurance policy, you're going to see personal property coverage. And that's typically automatically included as a percentage of the dwelling coverage. And hopefully it's covered at replacement cost. Sometimes, depending on the product, it can be covered at actual cash value. Replacement cost is better.
Yes. Always go with replacement cost. If you see actual cash value on a policy, circle it. and ask your agent and just be like, is this what it should be?
Yes.
Oh, wait, I can't give insurance advice.
Well,
I'm going to put a disclaimer right there. Tiffany is no longer a licensed insurance agent in the state of Washington.
Well, I am, and I will say replacement cost is better. You don't have to deal with actual cash value if you're involved in a claim. And then after personal property is typically where we see additional living expenses or loss of use, and that's typically going to be included automatically at either a dollar value, or it will be included at a time frame, so like 24 months. And so what that covers is if you have a covered claim within your household and you were displaced and you need to stay in a hotel or even rent another home while the damage is repaired, it pays for those expenses. And then after that, if we're looking at a quote or a policy, we're going to come into personal liability. And a lot of people don't really understand why that's associated with the homeowner's policy, but it is actually very, very important. So personal liability can cover a variety of incidents, but it really just covers you in the event that you get sued. So whether it has to do with an incident that happens on the property or even off your property, it can help pay for litigation fees or settlements if you are accused of being liable for injuries or for property damage, or if you are found liable for those things as well. So it's great coverage, and the reason it's on your homeowner's insurance is because if you are involved in some type of litigation, we don't want your home to be put into jeopardy as an item that you have of value, as an asset you have of value, because if you are involved in a lawsuit, more than likely the other party is going to do their research and see what assets you own and say, oh, well, they're worth this much. That's how much I'm going to sue them for. Gotcha. So by providing coverage for the settlements and litigation fees through liability, it keeps your home safe, your assets safe. Make the insurance pay for those things.
Exactly.
Hopefully you'll never need to use it.
Right.
But that's why it's so, so important to have on your homeowner's insurance.
All the things, and that's so much what insurance is we all hope that none of this stuff happens.
Of course.
Right? But then it's there when we need it.
Yes.
And there will statistically be a certain number of us who need it every single year.
Yes, that's true. It's true. I mean, people are using it, I promise.
Absolutely. Oh, for sure. The interesting one I found, those liability might be unusual for folks, but they can usually recognize coverage A through D pretty easily. But then medical payments gets a little interesting, or it's sort of this weird question mark. Like, what exactly is that?
Yeah. So medical payments, it's usually only offered up to about $5,000 per person. Some products will go up to $25,000, but basically it will cover immediate medical expenses if a guest at your household were to sustain an injury while on your property. So right away, they need to go to the hospital. It's an easy claim, and it just pays their medical expenses. Now, if it was a more complex situation where someone got injured, like say they fell down a flight of stairs and really hurt themselves, and those expenses exceeded what's in your medical payments, and that's probably when we're going to start looking at a liability claim. Yeah.
Awesome. So those are the different types of coverages. Now, what sort of things do they protect against?
Yeah. So insurance will protect against what we consider perils. So these are any types of events that can cause damage to your home or part of your home, etc. And so the perils that are insured against are going to vary depending on the actual product. But a typical well-rounded policy is going to cover fire and smoke damage, wind and hail damage, theft of your belongings, falling objects such as the tree falling on the home, as well as most water damage within the interior of the residence. The most common exclusions that we see are going to be earthquake, flood, and landslide. So those typically are not going to be covered under your homeowner's insurance. If you desire coverage for those perils, then we would shop a different type of policy.
So here in Bellingham, we have a lot of homes that were built in the 1890s, 1920s, 1950s, and then you have newer homes, relatively new, 2000, 2010, et cetera. I live in a neighborhood that was all built in 2001. So if someone's home shopping and they're shopping in these different age brackets, are there anything from an insurance perspective they should kind of be aware could be a question in terms of underwriting?
Yeah, that's a great question, because with insurance, a lot depends on eligibility. And older homes, we typically encounter a long list of questions of updates that have been made. But a big one that I get asked about a lot from people in the real estate industry is knob and tube wiring. So some of the older homes still have some of that active knob and tube wiring. So definitely keep your radars out for that, because it's not uninsurable. It's just going to be a lot harder to place. So it's going to be more expensive and probably not as good of an insurance as you probably would expect. The other thing to look for too would be, if there's any original plumbing within the household, and also just the general condition and age of the roof. Has it been replaced? What has it been replaced with? When was it replaced? So those are going to be some of the questions that your insurance agent would ask if you're purchasing an older home.
Some of those types of things do come up on a home inspection report. They're often kind of flagged as important or hazard or safety type issues on an inspection. So if you see that in your inspection report, you can always mention to your insurance agent, oh, I think I saw knob and tube. Oh, I think I saw this type of thing. Where can I place my home most correctly because of that?
That's perfect.
One coverage I don't have on my house that I probably should is sewer line coverage. What is that, and why does it matter?
Yeah, so we're seeing more and more companies offer it as an endorsement. So it might be called service line coverage, sewer line coverage, utility line coverage. There's a couple different ways you can find it. But basically it covers if there's damage to any utility lines going from your home to the city. So that could be, like you said, a sewer line is one we see quite often, water line, but it can also include if there's like buried electrical lines and that type of thing. And what's really cool about this coverage is it doesn't necessarily have to cover damage that occurs from an incident that's sudden and accidental, which in insurance we're typically covering events that are sudden and accidental. When it comes to that coverage, though, in particular, it can be just from general wear and tear. So say you find out, oh my gosh, my sewer line's failing, I need to replace it. You can utilize that coverage, but just know that every company does have a limit.
Right.
So it's either going to be like $10,000, $25,000, or $50,000 will be that limit. Whereas I think the cost, from what I've seen from most people, is around like $70,000 and up to replace the sewer line.
I mean, that's so much the case with insurance, is it's helping out the situation and making a bad situation better.
Yes.
Not always like,
definitely.
I want to upgrade.
Yes.
You know.
Yes. And yeah, it's definitely a coverage I've been recommending for folks who are in an older home in like a suburban neighborhood. And by older, I do mean more like 50 years old and up.
Gotcha.
And just seeing, it doesn't hurt to see what the cost is. It might surprise you how cheap it is. And it's like, okay, let's just add this on because we might have to utilize it.
Right.
Yeah.
Now, what about folks who have collections? Maybe it's jewelry, maybe it's art, maybe it's rugs, maybe it's any of the above. What kind of protection might they have if they don't maybe have a luxury home, but they maybe have this collection of expensive items, and that personal property coverage maybe isn't going to quite cut it for them?
Yeah, because like we said, your homeowner's policy is going to automatically include some personal property coverage, but there is going to be a specific limit that will pay out for those high value categories, so like art and jewelry and all those types of unique things. So if you have a collection and it means something to you, then you can schedule those items. And what that does is it makes sure that your items are going to be covered for their full replacement value. And it also opens up the types of perils that they can be covered for, oftentimes including mysterious disappearance, which is essentially losing something, right?
I love that it's called that.
Yeah, it's very fun.
I had this ring and now I don't.
A mysterious disappearance.
Dun, 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 dun.
And oftentimes there isn't a deductible associated with those items, or a very low deductible too. Whereas like, your homeowner's insurance, you have probably $1,000 or $2,500 deductible. If you have, let's say a $5,000 bike that you have scheduled on your policy, maybe you don't want to pay $2,500 for a claim for it, but you'd be fine with having no deductible or like $250 deductible.
Gotcha.
I mean, a lot nicer. Yeah.
Oh yeah, I gotta watch out for those bikes, especially in this area. I mean, we've got a lot of nice bikes and you have to keep an eye on them.
It is a common claim is bike theft.
Bike theft.
Yes.
There you go, bike policy on your home policy.
Yeah.
So if someone's doing renovations, remodels, and upgrades to their house, I mean, if they're painting their house, they probably don't need to call you.
Right.
But at what point should they be like, I need to call Cassie and see if my home's worth more now?
Yeah. I mean, that's exactly it. If you're going to substantially improve the home where it's going to affect that rebuild cost of the home, then we definitely should be reviewing what your dwelling coverage is. If someone is adding square footage to the home, then we might need to look at eligibility and look at moving you to a different type of policy temporarily, because a lot of homeowners insurance products are not flexible enough to provide coverage during serious renovations. And I'd hate for something to happen while you're in the middle of renovating and your homeowner's insurance to say, oh no, you're doing all this work on the house, that's actually ineligible, so we can't cover this claim, and you're getting canceled, so yay.
Right.
Figure that out. So yeah, I mean, it's best really if you know you're going to be pursuing a project in your home, just to kind of talk to your agent beforehand and just kind of get a feel of what you might need to do, because there's a couple different routes.
What generally are you seeing for the personal lines insurance? What would you want clients to be aware of and consumers, especially as they're receiving their renewals or they're applying for new coverage? Maybe they're renter moving into home ownership.
Right. Well, to be perfectly honest, it's a little bit of a rough patch. Now would be a good time for folks at home to grab their security blankets and their stuffed animals, because it's pretty grim. Throughout kind of the tail end of like COVID times and then going in with the last few years, the insurance industry as a whole experienced record claims. Think about the mass flooding that we had around here. Wildfires are becoming a real threat in our area specifically. And so a lot of companies are operating at a loss. And to readjust back into profitability, what companies are doing are they're raising rates, but they're also really limiting eligibility and really limiting the risks that they take on. They're being very specific on who's going to work for their product. And so with that being said, like you said, of course, as people are getting their renewals, people are going to see rate increases. And that's been going on the last few months, and we expect that to keep moving forward, probably going into the end of this year. Now, the benefit of being a broker is I do have other options. So what I do oftentimes when my clients are seeing these rate increases on renewals is we shop around. But the bummer of that is when we're shopping, like I said, companies really don't want to take on new risk. So it's a lot harder to find different options. For instance, a year ago, maybe I'm quoting a home built in, 2002, I'm getting like 25 options in terms of quotes. Now when I'm running a very similar home here in, can I say what time it is? March of 2024, maybe I get 3 options. Wow. A lot of companies, for instance, are saying we don't want homes with roofs that are more than 15 years old. We don't want to take any risks that are, a mile from what they consider high risk for wildfire. And I'm seeing that a lot with homes that, like, again, a year ago, I wouldn't have those same alerts, but now when I'm running reports and running quotes saying, oh, sorry, that home is way too close to a wildfire risk, we don't want it. So it's a little bit tougher out there, but there is definitely still opportunities. It just is a lot different than where it was at 6 months to a year ago. But as companies do readjust back into profitability, we should see that lighten up. But unfortunately, that probably won't be this year.
Yeah. Are people still seeing that home and auto combination seem to be working well
Of
as
course.
packages, or are you doing more splitting?
Yeah, I mean, it depends on the client.
Yeah.
I'd say we're probably doing more splitting than we used to. Typically, you do want to package your home and auto because the savings of those multi-policy discounts are so significant that it makes sense. But I am seeing more often that it's making more sense to place, auto with company A and home with company B, and combined, you're still getting a much better deal than if you were to package them with the same company, because maybe the company is giving a great rate for auto, but like a crazy rate for home, or they don't want the home at all.
Yeah.
They're only offering for the auto. And this is something we're seeing on the auto side too. So we're also seeing companies that are saying, hey, we'll take the home, but we won't take the auto. So yeah, it's really interesting. It makes my job a little bit more complex, but it's fun to get those pieces of the puzzle to work.
Yeah.
Eventually, we always figure it out in some way.
So pivoting over to auto just for a little bit. I mean, obviously we're focusing on homes here, but on the auto side, thinking of young drivers, what are young drivers are very expensive to insure, especially when they get a speeding ticket.
Yes.
What's your advice to parents of teenagers who are getting their permits, getting their licenses on what are you seeing? What might help kind of absolve some of that?
Right. Well, this is a subject that's very near and dear to me because I have a young driver. Yeah. Well, now she's 25, so not quite young, but I've been through that experience. And even if your child or the youthful driver is a good driver, they are surrounded by the worst drivers in the entire world. For instance, my daughter got hit 3 times. None of them were her fault, and they all were either in a school parking lot or directly outside of the school campus. So it is dangerous out there. And so, yes, they are expensive to add on. People are always very surprised of what the rate change is once they add a teen driver into the household. But there's also different companies that view the risk of a young driver differently. So it kind of makes sense to shop rates at that time. If you know you're going to be adding on a teen driver, we can kind of look at different companies and see who's going to get you a good combination of still great coverage, but a better rate perhaps. Doesn't hurt to take a look. And what I suggest to people is, make sure, if they're preparing, if we're ahead of schedule, right? They have a 15-year-old that's going to be driving. So make sure that they get their grades up. A good student discount makes hundreds of dollars of difference, and it's typically going to apply if they have a 3.0 or higher GPA. Wow. So it's not like out of bounds, and it can just make such a huge difference. And then the other thing to think about is not only is the driver going to be adding to your policy, but their vehicle will as well. And the rate of the vehicle is going to depend on, the safety features of the vehicle. It's all based on statistics. So how often that type of vehicle gets in accidents, how significant those accidents are, how much is it going to cost to repair that vehicle. So maybe don't buy your young driver a brand new, 2-door sports car, perhaps an older Camry. Or
my 2005 Camry in the parking lot is applauding right now.
That's like the dream vehicle for a teenager, because it's going to be safe for them, but it's going to rate a lot better. So if you don't want to be paying hundreds of dollars for your kiddo, that might be something to think about as well. And then I always talk to parents about what coverages are important to have for young drivers, because even if they are driving like an older vehicle that might not need all the bells and whistles when it comes to coverage, you do still want pretty well-rounded coverage because, like I said, they're probably going to get hit, and you want to make sure that they have coverage for those repairs. Yeah.
Fantastic. Yeah. Is there anything we have not covered in this conversation, specifically about homeowners side of insurance that you feel is important for consumers to know, or that you can get on a soapbox about because you're allowed to, because you're not talking to any specific client?
So there's a couple things when people are shopping for homeowners insurance, I always say, shop everywhere. Yeah. You have your auto with Geico right now? Great, get a rate from them, whatever. When you are comparing homeowners insurance policies, it's never going to be apples to apples because, of course, products differ. But there are a couple places that people should look when you're comparing to make sure that you're giving a fair shake. And also making sure that you're not getting yourself into a situation where you're not going to have good coverage or you can't pay your deductible. So the big ones to look at, of course, are dwelling coverage and that extended replacement cost coverage. So what's actually the coverage for your structure? What's that total amount that you're getting for that structure? And how that's going to be covered. if you look and there's some products out there, you'll find like little tiny writing that will say covered at functional replacement cost, or they'll have special limits. We'll only pay up to $10,000 for your roof replacement. So there are like those little things you want to look for. The other big piece too is your deductible. The higher the deductible, the lower the overall premium. So I have, for instance, seen people come in like, oh, well, I can get a way better rate with this company. And I'm like, yeah, because the deductible is $5,000, whereas your deductible here is $1,000. So do you want to pay $5,000? That's fine. But that's why the rate is so different. That's why you're seeing that discrepancy. So those are some big ones. And then also kind of like the optional coverages that are included, like water and sewage backup. That's typically an optional coverage, but it is a very common claim. So just making sure that you've got those covered. And I have clients ask me all the time, just if I'm not your agent, oh gosh, I did it again. If I'm not your agent, if you have a different agent, you can definitely ask your agent, say, hey, do I need these coverages? What are these coverages? Ask the questions, because you'll want to know when you're in the middle of a claim and you're standing in, 2 feet of water. You'll want to know if you have those coverages or not, and what those coverages are, and what you're going to be paying out of pocket. So that's kind of a big deal.
Absolutely. I appreciate that you mentioned deductibles, because that was one thing that you pointed out to me last year.
Yeah.
When I had a renter's policy and an auto policy at another local firm or local brokerage, and then I had them write me a quote for a home policy, and I didn't quite love it, but I also knew I'd been out of the industry a few years, so things change. And so then I just emailed it to you and just said, I'm not trying to just shop for rates specifically, but let me know your thoughts. And you were so great about saying, here's my pros and cons list kind of about this quote. It looks pretty solid, but I also noticed the deductible was really high. Let's look at this. And then you gave me a couple of options. And then that's when I moved my insurance back to you and back to PCF. I moved stuff around. It's all fine. And so I appreciated that, because you gave me those options. You showed me the differences that you had in mind and things that I hadn't caught and noticed. And so that's one of the things that I very much appreciate about Cassie is you didn't just assume I knew what I was talking about.
Nobody
does. I didn't, and nobody does. But you're in it every single day. And so you raised those questions, and then you just said, let me know what you want to do. And I was like, boom, I want that. Let's go with that. And then we moved forward, and we issued those policies and rocked and rolled. So I appreciate how you take such an education-first perspective and how you're really looking out for the people that are asking you questions.
Yeah, I mean, I think there is flexibility enough to where you can take my expertise, but I also want you to feel comfortable as the consumer with what coverage you have, and also the amount you're paying. Let's customize it. I don't think people realize that, when you get a homeowner's insurance quote, you can make changes, we can adjust it, we can customize it to exactly what a client wants. Most people are like, oh, I guess I'll take this. And, even if you don't ask the questions up front, because as you know, a home buying process is insanity.
Yes, it is.
And you kind of lose your mind, and maybe you are just like, that looks great.
Right.
I'm going to move on. Circle back. Circle back. Once you get comfy in your home, you're looking at this home that you're probably spending the most money you've ever spent on it. I would pull that policy back out and just take a glance at it. And if you have any questions, ask your agent about it to make sure that you know what to do in case you need to use your insurance eventually. Hopefully you never have to.
Exactly. Well, Cassie, thank you so much for coming into
for
the studio today.
It was so
and
great.
Basically doing an insurance class for all of us. We very much appreciate it.
Anytime. I love talking about insurance.
One last time, what's the best way for people to reach out to you if they have questions?
Yeah, the best way to reach me is either by phone or email. Can you just put that on here?
They'll show up right here.
Okay. Yeah, I still have my old email address because we're in transition.
Awesome.
But yeah, that's the best way to get in touch with me.
Fantastic.
Yeah, that's fine.
Awesome. So, take a scan of your declaration pages and just email it over and be like, hi, question mark.
Seriously, I would love that so much.
Fantastic. Awesome. As always, if you have any questions about local professionals in this area for anything to do with your home services type needs, you can always reach out to your friends over here at the Bellingham Real Estate Co., and we will be glad to connect you with some of our favorite local professionals for any of those specific needs. Take care. Have an amazing day.